Welcome to Spy Trader, the podcast that brings you the latest updates and insights on the S&P 500. I'm your host, Johnny Cashflow, bringing you the market news you need with a twist of humor and a dash of trading wisdom. It's 6 p.m. on August 22nd, 2024, and we've got a lot to cover today. First up, let's dive into the chaotic jobs data release. The Bureau of Labor Statistics faced heat for a botched release of jobs data. The initial delay and selective sharing with a few firms caused confusion and volatility in both stock and bond markets. Later, the corrected data showed job growth numbers were revised down by a whopping 818,000 jobs through March, the largest adjustment since 2009. This sparked concerns about the labor market's health and what the Federal Reserve's next move might be. Wall Street was understandably critical. Consistent mishandling by the BLS has led to premature releases and selective information sharing that create turbulence in the markets. Investors are uneasy, and rightfully so, because accurate data is critical for informed decision-making. Now, how does this impact the S&P 500? Well, the market's reaction to the job data suggests we could see continued volatility. The implications for Federal Reserve policy are significant, since a weaker labor market might push the Fed to consider rate cuts. Historically, lower rates give equities a boost, but that doesn't mean we're in the clear. Coming up next is Federal Reserve Chair Jerome Powell's speech at the Jackson Hole Symposium. This is where things get spicy. Market expectations are leaning towards rate cuts, but any hawkish surprises from Powell could drag the S&P 500 down. Investors are hoping for reassurance, especially with the job market showing cracks. Now, let's talk about recent earnings that stirred the pot. Zoom Video Communications. They reported stunning Q2 results with adjusted EPS of $1.39 and revenue reaching $1.6 billion, up by 2.1% year over year. Their enterprise revenue grew by 3.5%, and their online churn rate hit an all-time low of 2.9%. Shares jumped 13% to close at $68.04, still far from their pandemic highs, but a positive boost nonetheless. This bodes well for the tech sector within the S&P 500. Turning to trading recommendations, here's my take. 1. Zoom Video Communications ZM. Recommendation: buy. Reasoning: with stellar earnings, robust customer retention, and advanced AI-driven growth strategies, Zoom exhibits strong fundamentals. As part of a cautiously optimistic tech sector bounce back, it's a sound pick. 2. S&P 500 ETFs. Recommendation: hold. Reasoning: given the volatile environment and mixed signals, a cautious hold is advisable. Stay diversified to buffer against sector-specific shocks, notably in tech and financials. 3. Crocs. Recommendation: buy. Reasoning: strong market reaction to new marketing moves, appointment of Sydney Sweeney as spokesperson, and solid revenue from the Hey Dude segment suggest potential for growth. Plus, it's up over 50% year-to-date, showing resilience. Finally, let's end on a lighter note. Why did the businessman bring a magnet to the meeting? He wanted to attract some investors. A little humor to keep things light as we navigate these choppy market waters. That's it for today's episode of Spy Trader. Keep your portfolios balanced, your strategies clear, and as always, keep an eye on the hawks and doves over at the Fed. I'm Johnny Cashflow, thanking you for listening. Tune in again in a few hours for the latest updates and insights. Happy trading.